It's 5 a.m. in New York City. Good morning. I'm Bonnie Quinn with your Bloomberg Brief. Here's what you need to know. A Trump-Xi call on deck. The two presidents set to speak later this morning with TikTok and trade on the agenda. A $1 billion blow. FedEx expects a massive hit from trade volatility this year. And the BOJ surprises markets with plans to unload its massive ETF holdings. Well, if it was a buy everything day yesterday, it might just be a sell everything day today. We had futures pointed lower, although we're coming back to flat right now. Obviously, we hit all of those records across the US indices yesterday. We did see a little bit of selling earlier on, though, something to do with the BOJ, no doubt, because we also saw yields back up to quite an extent. If you look at the 30-year yield, when we flip the board, you'll see that we're at 375, around those levels now, which is very interesting because we were below 362 or so yesterday. Same thing for the two-year yield, though not as much, so a bit of steepening going on here with 357.15 on the two-year. It is obviously triple witching, so we're expecting more volume today as well, and that might have something to do with some of the moves. But we'll get into all of that in just a few minutes. I do want to point to the yen because that was where the action was at in the last few hours, and it's a really fascinating chart. You'll see the yen strengthening as the Bank of Japan showed that, yes, it is on the path to normalizing policy. And then as Europe came online and this idea of unloading of ETFs started to percolate through the market, you saw the yen give up those gains. So we'll get into all of that in just a few minutes. But first, let's get to some individual stocks to watch today. Over to London and Valerie Teitel. Valerie.
Good morning, Ivani. Let's start with a check on Intel, because after the rip-roaring rally of yesterday, we are in the red for Intel shares, down 2.8% after the 22% gain of yesterday. But this fall is on the back of a Citi downgrade, and it's a downgrade based on valuation concerns. Now, it's funny they bring that up because Intel at the moment trades at nearly twice the forward PE that NVIDIA does. But it does come after not only NVIDIA, but the U.S. government have taken stakes in the company, maybe warranting that higher valuation. But Intel on the back foot this morning after the gains of yesterday. Moving on to earnings, FedEx really catching many's eye because not only did they announce a $1 billion hit from tariffs, they also reinstated their guidance and were very rosy when it comes to the outlook on sales, expecting them to gain around 6% into the end of the year. It was this reinstating of guidance and gaining confidence on the shipping industry as the holiday season approaches, which really led the stock higher, up nearly 5%, really outweighing those tariff concerns mentioned by the CFO later in the call. And lastly, let's end in the Mag 7. Tesla getting a upgrade by the street. This is coming from Baird. They're citing AI potential when it comes to physical AI, that being their robotaxi ambitions, or their ambitions also into humanoid robots. So we're seeing Tesla lead the gains in the Mag 7 this morning, up some 1%. Note it has outperformed this month, but it does seem like there is some wind in its sails for Tesla. Bonnie?
Tesla always seeming to find that 420 mark, Val. Thank you so much, Valerie Teitel there. And later this hour, we're going to catch up with Jane Foley of Rabobank. She'll talk dollar, yen, and all things FX. So the Bank of Japan then holding interest rates steady and announcing it would start offloading its massive ETF holdings. For more, Bloomberg editor for the Japanese economy and government, Paul Jackson, joins me now. Paul, take us through how this decision got made, who dissented, and how it gets the BOJ closer to normalizing policy.
Well, I think if you look at the history of what the Bank of Japan's been doing in recent decades, it's been on this massive stimulus program to generate inflation in Japan. And we've had now 3 years or more of inflation at 2% or more. And under Governor Ueda, he's been pushing back, scrapping all these experimental stimulus projects that took place under his predecessor, Haruhiko Kuroda. And he's trying to normalize policy at the bank. So we've seen interest rates go from negative to positive. We've seen the scrapping of manipulation of yields. We've seen this colossal bond buying being reined back. And one of the issues that was still pending was this huge mountain of exchange traded funds, these stock funds. And these ETFs, the problem is they don't run off the balance sheet like bonds would when they mature. You've got to actually make a decision to sell them. So this has been one of the things that's been still on the to-do list for Governor Ueda. And here he is, less than halfway through his term, and he's already addressed that. And I think given the political instability at the moment in Japan, or should I say uncertainty, as we wait for a new prime minister to be decided, it was difficult for him to raise interest rates at this meeting. So in what way could he normalise policy? He's taken the chance, the opportunity presented to him, and he's gone for starting the selling off of ETFs.
Paul, how did this all affect the market? Because we saw the yen gaining, then giving up those gains, actually slightly stronger versus the US dollar again now. Yields rising, which also seems to be spreading to the United States, unless that's, FOMC related. Explain the market moves.
Well, I think we saw quite a delay in the announcement coming from the Bank of Japan. So I think traders out there were thinking something big's coming. And so I think we saw the yen strengthening at that point, this kind of idea that something's in the works could be a move towards normalization. I think when the ETF plan was then announced, it's seen as, oh yeah, this is a clear sign towards normalization. So you get a bit more strengthening. And then after a while, I think investors start to think, well, wait a minute, if we go at this pace, it's actually going to take like over a century to actually get rid of all these ETFs. So maybe this isn't as aggressive as we thought, and maybe this isn't telling us as much about where interest rates are going as we thought. But I think the main takeaway from today is that interest rates will be going up, and that the earliest it could happen is next month. But I think certainly after today's month, it's very clear that they will be going up by the end of the year.
All right, Paul Jackson, thank you so much for all of the context. Paul is in Tokyo. Over in the UK, the pound and gilts under pressure. Bloomberg's Ven Ram now joins us for more. So Ven, talk to us about the movements here, because we obviously had the dollar bouncing back. There's lots of central bank moves today, but dollar bears, for example, do they still have the same conviction post FOMC than they did at the beginning of the week?
I think there is a bearish case and a bull case to be made for the dollar, Bonnie. But I think that we have to see how this is going to play out. On the bearish side of things, you've got a Fed that told us this week that, look, inflation is going to be accelerating through next year. The jobless rate is going to be ticking lower, and the economic growth is going to accelerate. So all those wouldn't suggest that the Fed should be cutting rates. But they've also indicated a more dovish path than they did in June. So if you're going to cut into a scenario where growth is picking up and inflation is ticking up, that's calls into question your policy credibility. And we've got a lot of change in governors going to happen with the Fed, FOMC, next year in February. So all that calls into question the credibility of monetary policy, and that is a bear case for the dollar. But if you look at the bull case for the dollar, bullish case for the dollar, I think that what has happened in reality is that since the Fed cut its rates on Wednesday, real rates have actually ticked higher. And that bodes well for a currency. And that is what we have seen with the happen with the dollar. It's rebounded for 3 days on a trot now. And also what is very interesting is if you look at my model on the dollar index, what it shows is that the dollar was trading at a fair bit of with an embedded risk premium back in April and May as Trump unveiled those Liberation Day tariffs. And that was to the order of 5 to 6%. And we no longer see that risk premium embedded in the markets. Instead, the dollar is behaving like it would have done in ordinary times.
Yes.
So if that risk premium is going to be unbound, the dollar is going to go higher.
Van, a quick question on what's going on in Britain, because obviously we saw the UK budget deficit blow out today. It was much larger than expected, and that's after we already had Thursday announcement that the Bank of England plans to sell fewer bonds than anticipated, which would add to interest costs, of course. So does this move for yields in Britain, for gilts, keep going? Is the pressure on?
I think that the gilts are going to be on the back foot over the coming month, Bonnie, because you've got the dynamics that you mentioned, where the Bank of England is going to be selling less of gilts, and that means that more of it is going to reside on its books, which of course means losses that are indemnified by the UK Exchequer. And that means a bigger gap, fiscal gap for Chancellor Rachel Reeves to plug when she unveils her autumn budget. And then you've got the fiscal deficit numbers blowing out, as you mentioned. And that, of course, is negative for the government's finances and for long-term gilt investors. And so they're embedding a risk premium onto gilts back on, as we have seen. Already in the past 1 year, 30-year gilts have surged like 100 basis points.
Yeah.
And with the autumn budget looming, I think there's more of that to come. And I think that the 30-year yield will go towards 465 levels, the highest we have seen this century.
Wow, Ven, thank you so much. That is Ven Ram there for us. Later this morning at 9 a.m. Eastern Time, so under 4 hours from now, President Trump and President Xi are scheduled to hold a call. TikTok, tariffs and Nvidia chips on the agenda. For more, I'm joined by Bloomberg's Kasia Kimishinska, who leads our breaking news team in Washington. So, Kasia, what are we expecting from this call? Any deliverables or just rhetoric for now?
Good morning, Vani. Indeed, this will be a watershed moment for both sides. The most imminent reason for the call is the TikTok app in the US, where the American national security law requires the Chinese owners of the app to divest it, or it will have to stop operating. So the two leaders today will discuss the potential transaction. U.S. Treasury Secretary Scott Bessent said earlier this week that the commercial terms have already been agreed. And under the draft plan, ByteDance would keep only 20% of the U.S. operations, and the rest would be taken over by American investors. So this is the key issue, the most urgent one. But of course, the two leaders will also talk about trade, about tariffs, about rare earths, magnets, all those key sectors where the two largest economies look to expand the trade and lift some of the barriers.
It might be a very long call. Well, elsewhere, President Trump was asked about his stance on media aboard Air Force One after Jimmy Kimmel's show was put on indefinite hiatus. Take a listen.
I read someplace that the networks were 97% against me. I get 97% negative, and yet I won it easily. I won all 7 swing states, popular, I won everything. And if they're 97% against, they give me only bad publicity or press. I mean, they're getting a license. I would think maybe their license should be taken away.
Kasia, what are people in D.C. saying? What's the next step in the president's very aggressive stance against the media?
Indeed. So this was the farthest-reaching threat from the president yet. He said that the TV networks that have negative coverage of him and the Trump administration might basically have their licenses taken away. And those comments came after ABC took down the comedian show, the Jimmy Kimmel show, after his comments related to the killing of Charlie Kirk. So, of course, this was a very surprising, very aggressive statement from President Trump there, made to reporters on Air Force One yesterday. But he took other moves previously, most notably the lawsuit against the New York Times Ariel this week, where President Trump is seeking $15 billion in damages for what he sees as negative coverage of himself during the campaign last year. So this is this ongoing campaign from the Trump administration against the media. And of course, Democrats, for example, came out yesterday pointing out that this is the attack on free speech, on freedom of the press.
Kasia, the Wall Street Journal reporting this morning that Trump's team is exploring a government-backed manufacturing boost, so more input, if you like, into U.S. commerce. What are the details that we know?
This is about the $550 billion investment fund that Japan promised to deliver when Japan and the U.S. agreed on a trade framework earlier this year. So the Wall Street Journal reporting has some details about how this money would be spent. We know that the Trump administration is very interested in boosting manufacturing here in the U.S., creating more jobs in key sectors such as making pharmaceuticals, semiconductors, or even ships. So this money from Japan would go to manufacturing here domestically. And the U.S., under this plan that is in early stages, as the Wall Street Journal reported, under this plan, the federal government would give perhaps easier access to federal lands or federal waters. But again, nothing has been decided yet. These are just early conversations, mostly between President Trump and Howard Lutnick.
Kasia, thank you so much. That is Kasia Kimishinska in Washington. Now to other top stories trending on the terminal this morning. Bridgewater Associates founder Ray Dalio once again sounds the alarm on mounting U.S. debt. Speaking at a panel in Singapore, he said current debt, driven by runaway spending, is putting monetary order at risk. Signs of China using agriculture as leverage in its trade war with the U.S. For the first time since the 1990s, China has not bought any U.S. soybeans at the start of the export season. Soybean futures are up today ahead of an expected phone call between President Trump and Premier Xi. FedEx expects a $1 billion hit from trade volatility this year, highlighting the impact of President Trump's tariffs. Most of that hit stems from lower shipments from China to the U.S. It reinstated its profit and sales forecast, saying revenue will grow by 4 to 6% in the current fiscal year. The courier had previously withheld a full-year outlook. And coming up, Oracle's comeback. More on the legacy tech giant's rise as an AI infrastructure leader. This is Bloomberg. This is Bloomberg Brief. I'm Vonnie Quinn in New York. A boost in the shares of Oracle after a landmark $300 billion deal with OpenAI, briefly making co-founder Larry Ellison the world's richest person. Bloomberg Originals explains the legacy tech giant's rise as an AI infrastructure leader.
Oracle seemed to see this coming.
Oracle is having its biggest jump since 1992.
What a blowout quarter for the software company.
Maybe the stock of the year.
And then, just days later,
TikTok's US operations are set to be acquired by a consortium including Oracle.
Oracle shares spike after it's named as part of the consortium.
What was going on? This was an old-school enterprise tech firm, tickling investors in places only a flashy startup normally reaches.
Because Oracle basically said that they have almost $500 billion of contracts to be earned in the next few years. And that was a shocker.
Everyone was modeling maybe, $150 billion.
It blew away analyst expectations.
Now, Oracle's deeply connected to one of the hottest social media properties on the planet, and behind one of the most ambitious infrastructure projects on the planet.
Oracle had been written off as a kind of IBM-like company. This is an incredible comeback story.
All right, let's take a look at markets. Now we are a few hours away from the open of trading, and of course it is triple witching today, so expect more volume. But we did hit all those records yesterday on the major indices, and now we have futures higher once again on the S&P 500, although very, very fractionally. I guess the color makes a little bit of a difference when you're getting up this early in the morning. The dollar index is stronger by about 0.1%. We have sterling weaker by 0.4% today, and lots of central banking stories around the world helping the US dollar index, but the dollar bears are still out there making their case. And then take a look at the 10-year yield, because that is the story right across the US yield curve, but also globally. And in fact, it could be just a little bit of contagion out of Japan, because Japanese yields are much higher as well. Same for gilts. Gilts are under a lot of pressure as well today with the central banking moves, but the 30-year yield in the US is right back up to 3.75 today. So you have to ask yourself, are traders pricing in as many cuts, or is this just a one-day move? Take a look at this board of currencies, because it'll tell you where we are post some of these central bank moves. Look at Britain. We saw the trade deficit blow out today. Came in at above £18 billion. It wasn't expected to come in more than £12.5 billion. Added to that, the idea that the Bank of England isn't going to roll off as much off its balance sheet, which will add to interest costs. And that's where you have sterling, 135.03. Also have a weaker euro today. It was above 118, if you remember, yesterday. 117.67 is where we're at. Now, the yen has been all over the place today. The Bank of Japan signaling normalizing of monetary policy, but also talking about rolling off its ETF purchases. So depending on where you were in the world, you either saw a weaker yen or a stronger yen. But right now, we have the yen stronger at 147.78. Coming up, Deutsche Bank CEO Christian Sewing said to be facing a big lawsuit. And a look at what else is making headlines in your front page news. This is Bloomberg. is Bloomberg Brief. I'm Bonnie Quinn in New York. Time now for your front page news. First up on the Wall Street Journal, the Trump administration weighing a plan to spur construction of factories and other infrastructure. It would use money from a $550 billion investment fund established as part of trade negotiations with Japan to invest in the development of chips, ships, and quantum computing. Next up on the Washington Post, sources say President Trump declined to approve more than $400 million in military aid to Taiwan this summer. The move comes as Trump tries to negotiate a trade deal with China. The decision marks a U-turn in U.S. policy toward the self-governing island that China claims as its own territory. And on the FT, sources say Deutsche Bank CEO Christian Sewing is set to be named as a defendant in a multi-million-pound lawsuit. The lawsuit was brought by 5 former employees. The employees were sentenced to up to 4 years and 8 months in prison for abetting false accounting and market manipulation, with the convictions overturned back in 2022. Coming up, the dollar on its longest weekly winning streak against most G10 peers since July. We'll speak to Jane Foley of Rabobank. That's next. This is Bloomberg. It's 5:30 a.m. in New York City. Good morning, I'm Bonnie Quinn with your Bloomberg Brief. Here's what you need to know. A Trump-Xi call on deck. The two premiers set to speak later this morning with TikTok and trade on the agenda. A $1 billion blow. FedEx expects a massive hit from trade volatility this year. And the BOJ surprises markets with plans to unload its massive ETF holdings. Let's take a look at those markets now as we inch ever closer to the open in the United States. We have futures turned around now and pointing positive. This after we hit records across the board yesterday for all of the major indices. Russell 2000, Dow, S&P, you name it, it hit a record. We'll see if that continues today. It is triple witching, so expect lots more volume potentially today. We also had the Bank of Japan moving, and that might be impacting the yield curve. That or just continued fallout from the Fed. If we look at yields, we'll see they're higher in the US, but they've been higher in Japan as well after the BOJ signaled normalizing also those ETF sales. So you have the 2-year yield back up to 357. The 10-year yield now up another 2 basis points up to 412.5 actually. And the 30-year yield just below 475. That's a 10 basis point move in just 24 hours. Take a look at the yen. It's been yo-yoing versus the US dollar. It gained against the dollar once away to confirm the normalizing path, gave up the advance as Europe came online and started to digest more of the details. It is now just barely stronger versus the US dollar again. We're going to get into all of that with Jane Foley in just a moment. But let's get to some individual stocks to watch now. Here's Valerie Teitel. Valerie.
Good morning, Bonnie. Let's start with Intel, because after the rip-roaring rally of yesterday, Intel is in the red, down over 2%. It has been downgraded by Citi analysts. They're citing valuation concerns now that Intel trades at nearly 2 times the forward PE of NVIDIA, but it has attracted that investment from NVIDIA and from the U.S. government, maybe or maybe not warranting that high valuation. But Intel giving back some of its gains, down 2.4% in the pre-market. Let's move on to earnings, because as you mentioned, FedEx, the CFO announcing a $1 billion hit from tariffs, but it was more than outweighed by their bullish guidance on sales into year end. They're also reinstated their guidance as well. And this comes perhaps to give some confidence to the shipping industry that they have a bit of a more of a handle on what's going on in the shipping industry that's been so jostled by tariffs as they head into the very important holiday season. So FedEx up just less than 5% in the pre-market trade. Lastly, let's end with the Mag 7 leading a lot of the gains in the stock market yesterday, but Tesla on the roll again, up over 1%. This is on the back of an upgrade from Baird, citing more AI potential when it comes to physical AI, such as those robo-taxis and humanoid robots that we know Tesla is working on. So leading the gains of the Mag 7 with Tesla up 1%. Bonnie?
Valerie, thank you so much. Valerie Teitel there. Well, the dollar extending gains, set for its longest weekly winning streak against most G10 peers since July. Jane Foley of Rabobank weighing in and looking back to Fed Chair Powell's news conference, writing, quote, Powell's tone lacked the element of urgency that US dollar bears have been preparing for. Jane joins us now. She's head of FX strategy at Rabobank. So Powell's tone, Jane, may have lacked that urgency, but he did point to this being an insurance cut, a risk management cut. He did say that there was risks now on both sides of the mandate and they're going to be extremely vigilant. Is it warranted if traders are expecting perhaps we may not get those 2 extra cuts this year?
Well, 2 is what's priced in, and I think for many dollar bears, perhaps they were expecting a little bit more urgency, maybe a little bit more. And it's difficult, I think, given what Powell was signalling, given the voting pattern also. We only had 1 dissenter in favour of a bigger move this week, but also the data. If we look at what we had yesterday in the form of initial claims data, the Philly Fed, you've got to say, does the US economy really warrant anything more than more 25 basis points moves in the rest of this year, plus what the market has already got priced in for next year? And I think in order for the dollar perhaps to take another leg lower, we would have needed more, maybe weaker data, more urgency from the Fed, and that's not what we got. So, the dollar coming back on the back of that, I think that's probably natural. But also, if we look at the euro, the market's very long the euro, and you've really got to ask, does the market really want to extend their euro positions from levels? Because although we've had 1 or 2 glimmers of better data in Germany, the ZEW survey, well, quite frankly, a lot of the data from Germany remains really quite weak.
Yeah, for sure. And I know you're anticipating maybe a leg lower and then back up to 120. In fact, we'll get to that in a second. But just on the dollar short trade and it being so hefty, does the dollar bear wait for things to deteriorate, or do we see an adjustment at some point? And would that adjustment be maybe even violent if the trade is so crowded?
Well, because the trade is crowded, then there's always the risk of a violent move. Now, that's, I don't think, really what we've seen. Yes, we've seen quite a lot of volatility this week, certainly, but I don't think we've had, the real violence that perhaps you might be referring to. But, this all comes back to, I know you were talking about this earlier on in your show about hedging, and this is a big unknown, I think, for FX strategists, because, the dollar basically has been on a bull run since the global financial crisis, and that has meant that, if you were a non-dollar based asset manager, if you were buying US dollars, well, particularly if you were buying equities, you might think, I don't really need to hedge that position because if there is a risk off period, well, the dollar would likely appreciate. But there's a lot more question marks within some commentators about whether or not the dollar is still a safe haven, whether or not the dollar is going to continue to appreciate over the longer, medium terms. And, are equity asset managers now going to hedge their equity positions? And more importantly, are they going to hedge for positions that they already own? Now, certainly if you were a European asset manager in US equities, you might probably be wishing, those positions were hedged this year. And if those guys do decide to hedge a lot more on the assets they already own, well, that's when we could get this other flurry of dollar weakness extending. And that could be something that's a little bit sort of self-prophesizing, if you like, that the weaker it goes, the more likely these guys are to hedge.
Yeah, and I want to ask you to the benefit of which currencies, but first of all, do you have a fair value for the US dollar? Is it even possible to put fair value on it right now?
Well, there's always, models that determine fair value, but these can be, really quite subjective. And in my mind, perhaps over the last, 10, 15, 20 years even, something like 120, 125 is certainly perhaps closer to what many models deem to be fair value than, say, parity, even though there have been periods when, parity is obviously where, the currency might be going. So, fair value isn't necessarily something that's tradable per se. So, but it certainly is something which does give you something to hang your hat on, if you like, over the longer term.
Jane, how will the Bank of Japan's decisions, and there were multiple of them today, impact the currency markets, and that we've definitely seen the yen yo-yoing? It seems to be sort of continuing on this strengthening path just a little bit. Do we see any more big moves perhaps into next week?
Well, I suggest that maybe a lot of the volatility will start to peter out as we get into next week. This is a case, I think, of the market shocked about the ETFs, wondering what's going to happen to the Nikkei. We've got to that the Nikkei has been a really strong equity performer this year. A lot of more international interest in that index. So, recently over the last year or so, because of all the reforms that have been going on in Japan. Now, those reforms will continue. Clearly, that does make it perhaps more complex for the market to distinguish whether or not they want to, increase their positions in the Nikkei. This program of ETF selling. But, I think in terms of the bear message that we got from the Bank of Japan's Governor today was something of normalization. He's coming on board, or he has been on board. He's normalizing. We've got to remember that real rates in Japan, and this is something that Ueda has stressed several times, are really extremely low. They're sort of at levels that you would normally only see in an economy during a crisis. And he is normalizing. The ETF program, I think, is part of this, or at least what he's doing today. And it looks like he does want to, hike interest rates. So I think that was a signal. We got that from the voting panel. 2 members already wanting to hike rates today. And I think the yen can grind a little bit higher on the back of that.
So, Jane, if we're looking at potentially 2 more cuts from the Fed this year and potentially a hike either in October or December from the BOJ, where does that put your dollar-yen target for the end of the year?
Well, of course, you've got to remember that a lot of that is already in the price. Perhaps a lot of moving around in terms of the actual moves for Japan specific. But I do think that dollar yen can go lower, but perhaps not significantly lower. I mean, we've got 140 as a 12-month target. So, that's a bit of a grind. And that does assume that there will be another rate cut before the turn of the year. So a slow move lower for dollar yen. But I do think that that's the direction that the currency pair will be in.
Jane, I want to ask you about something a little different. We have a story out today talking about volatility in FX and how it's the lowest it's been in a year, and it's just extraordinarily low. You don't get pairs that are moving more than 1% in a day really ever anymore, and that is thanks to advancements in electronic trading. That's what traders are saying, at least. What are your thoughts on that, and could that be true?
It certainly could be true. I mean, certainly, trading rooms are, a lot quieter places these days because of that. The pricing is perhaps more uniform than it used to be because of that. But I think you've also got to look at, the customer base, the client base, and what they are doing. And I think the technology really has, changed the market in many ways. So I think that is probably part of the story as well. But I think the information flow is also part of that too. People are, more well informed because of the news flow, the ability to get news, and I think that is part of the reason. The way that investors and the corporate base are taking their positions has also become a little bit more smoother, a bit more sophisticated these days.
All right, Jane, thank you so much. Always a pleasure. That is Jane Foley of Rabobank. Now to other top stories trending on the terminal this morning. Bridgewater Associates founder Ray Dalio once again sounds the alarm on mounting US debt. Speaking at a panel in Singapore, he said current debt driven by runaway spending is putting monetary order at risk. Sumitomo Mitsui is raising its stake in Jefferies to 20% from 15%. The 2 banks will also merge equity operations in Japan. Japan's biggest banks are bolstering ties with US counterparts to broaden revenue streams across borders. High-speed trading firms are rapidly increasing pay for entry-level jobs in India. Amsterdam-based IMC Trading, for example, has offered interns up to $14,000 a month. The hiring push and lavish pay packages continue despite increased regulation in India, which is now home to the world's largest equity derivatives market. Coming up, tariffs, TikTok and Nvidia chips all looming over an upcoming call between President Trump and Xi later this morning. This is Bloomberg. This is Bloomberg Brief. I'm Bonnie Quinn in New York. Presidents Trump and Xi set for a call at 9 a.m. Eastern Time in an attempt to potentially ease tensions around TikTok, tariffs and Nvidia's chips. Bloomberg's Kasia Klimashinska joins us now from Washington for more. Kasia, what are we expecting out of the call?
Good morning. This call will happen at 9 a.m. Here in Washington. And the two leaders will first discuss, as you mentioned, TikTok. So the U.S. operations of TikTok should move the ownership from China, from Biden's to American investors. President Trump praised them yesterday without naming them, saying that they will be all American significant investors. So that's to address this concern that right now, under the current ownership, China is able to perhaps see the data of the U.S. users or maybe influence them in some way. So we will see whether President Trump and President Xi agree on a transaction here and whether the commercial terms will be announced after that. But beyond TikTok, there is a lot of other issues. As you mentioned, there are tariffs, there is trade, semiconductors, rare earths, and maybe even potentially agreeing on two leaders to meet in person later this year.
You know, I want to ask you about President Trump's stance versus the media he disagrees with. He was asked about this aboard Air Force One after Jimmy Kimmel's show was put on indefinite hiatus at ABC. Just take a listen.
I read someplace that the networks were 97% against me. I get 97% negative, and yet I won it easily. I won all 7 swing states, popular, I won everything. And if they're 97% against, they give me only bad publicity or press. I mean, they're getting a license. I would think maybe their license should be taken away.
What's being said around Washington, D.C.? What's next on this?
Yes, so this is the farthest-reaching threat, yes, from President Trump against media that he sees as delivering negative coverage of himself and his administration. As we heard, he said that most mainstream TV networks are negative, are saying bad things about him, and so their licenses should be looked at and perhaps taken away. So this is President Trump threatening to use the FCC to pretty much censor the media. And this is how Democrats, for example, see it. And so they said this is an attack on the freedom of speech, freedom of the press, and they urged for the head of FCC to resign. This isn't really new. This is just an escalation. But, for example, earlier this week, President Trump also announced a lawsuit against the New York Times seeking at least $15 billion in damages, saying that the newspaper's coverage of his presidential campaign was negative and unfair, and going not only after the newspaper, but also after specific reporters there.
Yeah. And then also we have from the Wall Street Journal reporting today that Trump's team is exploring a government-backed manufacturing boost. What do we know about it?
This is President Trump's potential draft plan to use the money from Japan. When U.S. and Japan agreed on a framework trade deal earlier this year, the Japanese side committed to investments up to $550 billion of money flowing into the U.S. And the White House has a say about where this money will go, and they wanted to go into manufacturing of some key products such as pharmaceuticals or semiconductors or even ships. So the Wall Street Journal is reporting that the federal government is looking where to put this money and how to facilitate those investments, for example, by granting access to federal lands or waters. But this plan is in very early stages. It's mostly the conversations between President Trump and Commerce Secretary Howard Lutnick at this point.
Kasia, thank you so much. That is Kasia Klimaszinska there in Washington. One stock we're keeping an eye on today, FedEx. Shares rising in the pre-market after it reinstated its forecast. It's forecasting sales growth now, but also seeing a $1 billion hit from trade volatility this year. For more, let's bring in Bloomberg's Jennifer Creary. So, Jennifer, first give us the details of this $1 billion hit. How did it come to that number?
Yeah, so there are two reasons, really. So the majority of that $1 billion hit to adjusted operating profit is coming from lower shipments from China to the U.S. because of tariffs, of course, squeezing that extremely busy trade route into the U.S. Now, the second reason is the removal of the de minimis exemption back in August. Now, FedEx is saying that that will deliver about a $300 million hit to the company. Of course, the de minimis being that long-standing policy that goods under $800 US could come into the country duty-free. Listen, for a long time, a lot of these companies have really struggled to give forward-looking statements. headwinds. FedEx previously withheld its full-year profit guidance, saying, listen, it's too difficult to know where demand is going with all of these erratic trade policies. So at least there's some guidance now from FedEx about the impact of these headwinds on the company.
Put the $1 billion, charge into context for us. And is it coming at a good time in some senses for FedEx, given that it's already engaged in sort of, consolidating and cost cutting?
Yeah, exactly. So it is trying to cut costs, and like a lot of its peers, it's going to find ways to try and manage those headwinds. That it's trying to find $1 billion of savings as well from cost-cutting initiatives, including combine some of its networks, including its ground and air operations, historically separate networks. But with the upcoming holiday season, this is certainly not something that FedEx wants, but cautiously optimistic was the term that they used yesterday. They think that they can shoulder some of those difficulties. Of course, the company yesterday reinstating its full-year profit and sales guidance. So clearly they think sales will be robust enough that they'll be able to offset some of those difficulties.
Back in the day, FedEx used to be the bellwether for the economy, right? And it's kind of becoming that once again, or at least to a certain extent.
Yeah, exactly. It's got touch points in so many different sectors, consumer, industrial, industries. So certainly it's a good bellwether for where the U.S. economy is heading.
All right, we'll watch those shares today. Jennifer, thank you so much. That's Jennifer Creary. Coming up, Fed speak, triple witching and a Trump she cold. We'll get you set up for your trading day next. This is Bloomberg. This is Bloomberg Brief. I'm Bonnie Quinn in New York. Now a look at what's ahead today. First up, Presidents Trump and Xi scheduled for a call at 9 a.m. Eastern Time. Then Fed speak resumes. Oh, how we missed it. San Francisco Fed President Mary Daly due to speak at 1 p.m. And $5 trillion quarterly triple witching options expiry hit the equity market, so expect a lot of volatility, perhaps at the open and particularly at the close. Let's get a look at some of those movers that we are seeing pre-market. So FedEx, one of the obvious ones, rising despite expecting a $1 billion hit this year from trade volatility. It reinstated its full-year sales and profit outlook after the close yesterday, and investors are rewarding that stock. Tesla upgraded to outperform at Baird on AI potential for the company, and it's up another 1% past that 420 mark. Intel down 2.2%. Of course, it had a huge run up yesterday, but Citi has downgraded the chip maker now on valuation concerns. Citi perhaps thinking 30 a little too rich for Intel. But let's take a look at the macro environment, because it's been a huge week of central banking moves, not least the FOMC, obviously. We also, though, of course, had plenty of geopolitical moves this week as well, and we hit all of those records. Now, it's too hard to say what's going to happen today when it comes to equities. They were pointing earlier lower futures, now they're pointing higher, Russell a little lower, but we did hit all those records. So if we can stay anywhere in the environment today, I think it will have been a good week for most people. Let's take a look at yields, though, because we're seeing a lot more movement there, right back up to 474 almost on the 30-year yield. So the long end definitely steepening. Short end higher too, but perhaps by not as much, 357.86. We saw yields higher in Japan as well after the Bank of Japan moves, and that could be having a little bit of an effect around the world. We're seeing gilts under pressure as well after the BOE and also after the budget deficit blew out. But take a look at the Japanese yen, because this was a fascinating move this morning, and it's obviously having an impact on the dollar as well. You saw the yen just drop like a stone after we got some decisions out of the Bank of Japan that pointed to normalization, but also ETF selling. That reversed, and now we're basically just yo-yoing. So we'll see how the day pans out. That's it for Bloomberg Brief. Surveillance continues the conversation. This is Bloomberg.